Why aren't your investments topping the S&P 500? Welcome to the program You Can Surpass the Stock Market. Here I show you how you can reach the peak where few arrive in the stock market. I am Francisco and I'm an expert in finding stocks that can top the S&P 500. Today we're going to dig into the common mistakes people make to top the S&P 500, and then I'll reveal the right way to finally get ahead. Stick around because this could change the way you invest forever. Let's start by breaking down what it means to top the S&P 500. The S&P 500 is a stock market index that tracks the 500 largest companies listed on US exchanges. It's often used as a benchmark for overall market performance. If your investments are topping the S&P 500, it means you're getting a better return than this group of companies on average. Sounds simple, right? But in practice, it's far from it. Now, here's where things get tricky. It's not just about picking a few winning stocks. Topping the S&P 500 requires consistent performance over time, not just one lucky trade. And it's here that most investors hit a wall, which is what many people do. Big risks can also mean big losses. 90% of investors are failing. Here's the secret strategy to turn things around and leave them all behind. Don't top the stock market. Only about 10% do over the long term. Don't you believe it's possible to consistently topping the stock market? I'll prove you wrong. You may think that consistently topping the market is impossible, believing it's a feat only for Wall Street insiders or purely a matter of luck. This skepticism might prevent you from even trying, causing you to settle for average returns and miss the opportunity to significantly grow your wealth. While it's true that many investors fail to top the market, some consistently do so by following disciplined, proven strategies. Learning these methods, backed by data and experience, gives you a real shot at outperforming the average investor. Adopting a proven smart strategy allows you to challenge the norm, potentially achieving superior returns and putting yourself among the top performing investors, regardless of your starting point. So, what's the right way to break ahead of the market? The answer lies in focusing on long-term, value-driven investments. This approach is about finding companies with strong fundamentals, those with solid balance sheets, consistent and sustainable earnings growth, and competitive advantages that set them apart in their industries. You're looking for stocks that are undervalued compared to their intrinsic worth, meaning they're priced lower than their true potential.